SAVA Sciences is being bought by the largest asset managers in the entire world. We saw BlackRock, Vanguard, and State Street all buy more of this stock. What I'll do in this video is I'll go over the short interest numbers, which are very intriguing. I'll also go over the balance sheet for the company, and then at the end of the video, I will give you a price prediction for this stock. So with that being said, let's talk about it here. So BlackRock increased their holdings by 3.4%. Over the past quarter, we also saw Vanguard increase their holdings by 1%. We saw State Street increase their holdings by 7%. So the top three asset managers in the world are buying more of the stock. Obviously, that's a positive. Obviously, there are passive indexers as well, so it's not the end all be all, but it's still good to see that we're seeing a ton of buying from institutional clients. And then even beyond those couple names, we see buying from Morgan Stanley. Morgan Stanley increased their holdings by 153% over the past quarter. We also saw Fidelity increase their holdings as well. So large asset managers are buying more of the stock. Charles Schwab increased their holdings. So like I'm trying to hammer home the point that institutions are very bullish on this stock. So with that being said, let's jump into some short interest numbers for this stock. So this company has a very high likelihood of a short squeeze. So we have 40% of the float sold short, and we have 28 days to cover. For those that don't know, days to cover basically tells you the average days of volume it would take to cover the shares that are sold short. So in this instance, it would take roughly 29 days of average volume to cover the shares that are sold short. When we're looking for a short squeeze, we look for a days to cover ratio of over 10. And that signals a high likelihood of a short squeeze. So to be at 40% short interest as a percent of float and over 20 for days to cover really implies that this stock has a very high likelihood of a short squeeze. And Fintel here also agrees with my thesis. In fact, they rank this company as the 30th most likely stock to have a major short squeeze. So that puts this stock within the top 1% of the market in terms of likelihood for a short squeeze. And then also we have short borrow fee rate, which is extremely elevated. So short borrow fee rate is basically what investors will charge short sellers to short their stock. And typically this is anywhere from 0.3 to 3%. Right now we're at 65%. So that signals that it's very expensive to short the stock, which signals massive demand, and that could really turn on its head. As it becomes more expensive to short the stock, less institutional clients, less hedge funds will come in and short the stock because it's so expensive to do so. And then we also have failure to deliver numbers at all time highs. So this is a very important short interest metric here. It basically shows you the shares that are not being delivered to short sellers, or excuse me, to institutional or non-institutional clients, to investors. Sorry. So roughly 420,000 shares failed to deliver over the past month. And this is an all-time high number for the stock. If you don't understand what failure to deliver is, it's basically when those investors, those short sellers, don't deliver shares back to those investors. This is technically legal. The SEC basically says it's legal for 60 days. So all you really need to know here, if you didn't understand that, all you need to know is that within the next 60 days, there will be 424,000 stocks or 1,000 shares bought by short sellers to remain compliant with the SEC. Therefore, roughly 500,000 shares will be bought over the next 60 days by short sellers. So this is very interesting. This failure to deliver number can cause short squeezes, right? Because it's basically a mandate to buy shares. So 500,000 shares need to be bought over the next 60 days for those firms to remain compliant. So huge amount of shares definitely will have somewhat of an impact on the stock. And then with that being said, let's take a look at some of the insider buying we've seen for this company here. So we can see here that they're in Q1 of this year, we had 88,000 shares bought by short sellers, and in Q3 of this year, we had 48,000 shares bought by insiders. Sorry, insiders here. So C-suite people, directors, management, the people with the most information on this company are buying more of the stock. That's definitely a positive. You'd like to see that. So awesome to see that those insiders are buying more stock. And then let's take a look at the balance sheet for this company. So we have $142 million in cash. We have zero debt for this company. Therefore, we have basically our net debt is $142 million. So awesome to see that there's no debt for this company. That's very important because this company obviously doesn't make any money right now. So your cash is kind of, your air for a business, to use a Kevin O'Leary quote. So it good to see that there. And this equals out to about $3.30 per share. So over 10% of the market cap is in cash, right around 15% of the market cap is in cash. And then we have, so the only negative here is our net operating cash flow is minus $81 million. So when you consider that capital expenditure is very low as well, that basically tells you that our cash burn is roughly $80 million a year. Therefore, we only have about a year and a half worth of cash on hand. Obviously, the company could, start getting some revenue in, and that's definitely possible. But as it stands right now, we only have a year and a half left of cash for this company, which definitely does kind of exhibit extreme importance over the next couple months for this company. So the next 6 to 12 months are going to be real crucial ones if this company wants to, maybe issue new debt, issue new equity. They're going to have to figure out something for their debt load, or I shouldn't say debt load, for their really just balance sheet in general. They're going to have to figure out if they want to raise more cash or they want to, raise equity, or excuse me, raise raise cash through equity or debt. So really two options there. Obviously, debt is, more preferred for Wall Street. No one likes to see equity raises and, share dilution. No one likes that as a shareholder. But with rates so high, it may make more sense for this company to issue equity. So don't be surprised if over the next 6 to 12 months we see some share dilution. Unfortunately, it is very possible. And with that being said, let's take a look at the chart and give a price prediction for this company here. So we fell below the 200-day moving average once again. The last time we fell below the 200-day moving average, we headed down to the 100-day moving average at around $19. I think that setup kind of makes sense again here. So I believe we see a move lower down to the 100-day moving average at around $19.50. Longer term, I think this company definitely does have potential to move higher, but I would want to see them move towards profitability. I'd want to see them get some revenue in before I kind of jumped headfirst into this stock. So with that being said, though, let's take a look at the seasonality trends for this stock here. So this chart shows me, one second here, this chart shows me the average monthly return for this stock. So in November, shares do typically rise 4.3%. In December, though, shares on average on average drop 5.5%. So this tells me that December is typically a seasonally bearish month for the stock. It's actually the second worst month in the stock's history. So that can tell you that we're moving into a seasonally bearish trend. We have kind of a poor technical setup. Therefore, I believe we see a move down lower to about $19. It seems very logical in the short term for this stock. So that's just a price prediction based on technical analysis. Not saying the stock's going to zero, not saying the stock's going to 1,000, just saying that the technical setup implies that we probably move down to this 100-day moving average at around $19.50, like we did just earlier in this month. So with that being said, covered a lot in today's video. I hope you enjoyed it. If you did, please leave a like and subscribe, and I'll see you here next time.